Hello everyone, welcome back to another episode. I'm your host, the Millennial Investor, and today we're going to be covering a stock that I typically wouldn't cover on this channel, but I went over to my buddy Rex Finance and we were talking, and I just realized that he just hit a double up on this stock, WKHS or Workhorse Group. He bought it at 284, and today if we go ahead and hit the research tab and then type in the ticker symbol here, Workhorse Group now just broke $7 a share. It is up here again 22%. It's also one of the top movers today on Robinhood. It's one of the most searched terms on Yahoo Finance. This stock is absolutely exploding, and on the last 3 months, it is up 277%. You can see he bought it here at a very good price. What did he buy it at? It was $2.84, and you can see that he bought it right around the lows here about 3 months ago. So overall, this stock is absolutely exploding. It is hitting highs that it hasn't hit in a very, very long time. For a long time, this company was an extreme spec stock. They had no revenues, and now they're beginning to develop some of their products. And I wanted to go over some of the information of this. I've seen some more hype about it in the comment section as usual. So basically, overall, just to wrap everything up in general, I wanted to go over the good, the bad, and the ugly with the stock, and should you invest in this stock in general. But before we get into that, just a real quick shout out. Before we get any further, we now have 16 successful referrals. If you use my link in the description of all of my videos, you can go ahead and get started with your M1 Finance dividend portfolio or invest in Workhorse Group. And in the description of all my videos, this is pasted and copied right here. There's other links as well where you can sign up, not just for M1 Finance, but other things, including like credit card referrals and also sessions that you can sign up for me, maybe schedule a call and I can help you with your portfolio. But anyways, if you're interested with that, the links are in the description. But let's go ahead and get started with Workhorse, and we're going to go over some of the information why it's been going up. So the main reason is, those of you that don't know, one stock that's been very hyped up recently is NKLA, or Nikola Corporation. It's down a little bit today. Over the last 6 months, it is up 578%. So Nikola has absolutely exploded recently. You can see the massive move up there in the last month or two. But overall, this stock has absolutely been hyped up by everybody, and I think it's been overbought an extreme amount. The stock does have some very high potential, and as a speculative play, I think it is very interesting, but up 500%, I think it's a bit much. So what about Workhorse Group? Are they like Nikola Corporation? Do they have a lot going for them, or are they just some no-name that everybody's hyping up for no reason? Now, this article was written by the Motley Fool just a day or so ago, and they are in relationships with the United Parcel Service, and they are in relationships with FedEx. So those are two huge names. You all know those names. So those are two very big names. You all know FedEx and United Parcel Service. Those are very big companies, and it's great to see some approval from those large corporations. Those of you that didn't know, they also had some huge bumps up in share price targets from analysts. One of them raised it from $5 all the way up to $10, so a double up, talking about the C-Series being a springboard for the new fleet. So let's go ahead and get into the three products. We're going to hit the Horsefly tab here. Those of you that don't know, this is the investor relations page for Workhorse. Workhorse has an amazing investor relations page that goes over their products and what they offer. So we're going to go over in order. We're going to go over their Aries delivery app, what that does and what it's used for. Then we're going to go over the C1000, which is their fully electric autonomous vehicle trucks. And then we're going to go over the Horsefly drone. So I'm going to read these and I'm going to go over each tab. So Aries is a custom Horsefly user control center. Built by Workhorse, this technology allows the user a variety of monitoring options, which includes location of package, truck, drone, and real-time onboard video of Horsefly. The C1000, our autonomous system, is integrated with the C1000 electric delivery vehicles. The truck is the jumping off point for the drone, and then the pair will meet after the delivery is complete. The truck features a control center for the driver and auto-landing Horsefly roof with charging capabilities. And then last, we have the Horsefly drone. The Horsefly is a 4-rotor UAV that can fly fully autonomously. Our custom-built drone is designed for safety, efficiency, and can undergo the rigors of day-to-day delivery. And those of you that don't know, UAV stands for Unmanned Aerial Vehicle. That's what UAV stands for. So anyways, let's go ahead and start with the first one. Let's start with the Aries app, and let's talk about what this offers. So basically what this is, it's going to be a software, it's going to be an app, it's going to be a system that can automatically track your packages and give some more information about how your package is being delivered. It's going to monitor the locations, it's going to give you up-to-date locations on where your package is and when it will be arriving, and then obviously it'll track the performance and the efficiency to optimize the routes towards this. Now this will be beneficial for both the drivers, the delivery person, and the person ordering their packages. So the person ordering their packages can track it, get notification, but the main thing here is performance. So for the drivers, it's going to optimize as it goes to get the fastest performance possible. So you can see here, Metron tracks 500 vehicle data points every 10 seconds, and it has an interactive map, an optimized delivery routes, what we were talking about performance, how it will adapt as it goes. It will create the maximum efficiency at all times, and then it will have GPS data sent to the cloud and updated for the company and for the customers as well. It'll also track things like the charging limits, the charging stations, and also the number of stops that it takes to get the most efficiency possible. So next, let's go ahead and hit the C Series tab, and we're going to look at the vehicles. So they have the C650 and the C1000, and the C1000 is the main thing that they'll be rolling out. That is their big dog. The C650 and C1000 are revolutionary step vans built with composite lightweight bodies that provide best-in-class MPG. Utilizing the industry's first four-wheel independent suspension system that includes rear air shocks and providing unparalleled smooth ride for the driver and the load. C650 and C1000 step vans set a new standard in design and efficiency for the last mile delivery segment with its C650 cubic foot and 1000 cubic foot vehicles, both weighing approximately 12,500 pounds when fully loaded. Workhorse C-Series vehicles are powered by a modular battery pack system which provides between 35 kilowatt hours when equipped with 2 battery packs and 70 kilowatt hours when it's standard 4-pack configuration. And they are 100% electric, just like a Tesla vehicle. They are not some hybrid between gas and electric. They are 100% electric, and that's it. They have a low floor design. We lowered the floor of our entire vehicle, which allows easy in and out access for the driver. This feature also increases the usable volume for packages in the cargo area. And then Metron AP. Metron is a proprietary telematics system developed by Workhorse. This multi-platform application allows you to track and monitor the performance of all Workhorse vehicles in your fleet and collect the data you need to optimize route planning and monitor maintenance and fuel costs throughout the life of your vehicles. And then those of you that are interested, I won't go through this line by line, but you can see some of the specs, some of the specifications for these vehicles, and you can see through it right here. I'll just slowly scroll through. You'll see some of the different features that these vehicles have. And those of you that wonder, here's a couple snapshots of the 650. Curious what the inside looks like and what these delivery vehicles are going to look like, some of their features. And so far, they're looking at doing 800 locations through rider systems. And then you can see the map right here. They're primarily focused on the East Coast, but they're developed between all different states of the country, and they're developed between all different areas and all different parts of the country. So now that we've went through that, let's go ahead and take a look at the Horsefly, and this is what's really interesting. You can see this little video here. I showed it earlier. This is on their investor relations page. So this is really cool. We're going to look here that they have an LTE data connection. They have a winch safety system. The weight is 23.6 pounds, and their max speed is 45 miles an hour, and this is the main thing here. $0.03 per mile. You can see here they're not going to just drop it right on your front porch with the drone itself. It's going to lower by a winch and then drop it so that way people can't get the drone and try to destroy them as easily. And then you can see once again the specifications here if you want to look at those. I'll just stop real quick. If you want to see, you can pause the video. But the main thing that's really interesting to me is $0.03 per mile. That is an extremely low energy cost. That is going to save tons of money if this technology does get developed the way that people are hoping that it will. So some of the features that come with Horsefly is the delivery. Choose the exact location of delivery on your property down to the exact foot. You're going to be telling it exactly where you're wanting it down to the foot. You're going to be able to monitor your package. You're going to watch it go to your doorstep. You're going to watch your package on its journey to your doorstep, and you're going to watch it drop directly on your front porch. And then the video is real time. Once again, with the monitoring, you're going to be able to watch it in real time. You're going to be able to share it with your network. You're going to be able to cancel delivery if necessary. So even if it's halfway through its route and you decide that you no longer want the package, it can just turn around and just take it right back. It has Horsefly speed, package weight, and much more included in the app and the system that it will be developed on. So overall, now that we've been through a bunch of the investor relations page and we've been over the main categories of where they're going to make their revenue and where they're going to get their money, now I want to go over some of the fundamentals of the company, because those of you that know, I'm a dividend investor. I focus on very old blue chip companies. Those that you want to see my portfolio, which I will be giving an update at the end of my portfolio, by the way, I invest in primarily blue chip older companies. I do have some newer high growth tech stocks like Broadcom, but I mostly focus on the old-timey blue-chip companies that have been around for centuries. So when a company like Workhorse, why would I even cover this company, and why would I be interested in showing it to you guys? So one thing I would like to point out, now that we've been over a lot of the benefits of this company, I want to show you the balance sheet and the financials of this company, and then I'll give my opinion on whether or not you should buy this company. So overall, let's go ahead and look at the balance sheet. Let's start with the balance sheet first. So on an annual basis, they have $24 million in cash and cash equivalents, zero in short-term investments. Those of you that don't know, these numbers are in thousands, so add 3 zeros behind this. So they have $24 million worth of cash. They did just increase that cash position quite heavily in the last year. This was updated at the end of 2019, so a couple months ago. And then their long-term debt is $38 million. So a ratio of about 1 to 1.5 in cash to long-term debt. So nothing that is completely out of control. I've invested in companies that are much better and much worse than that. 1.5 times its cash and cash equivalents is not anything that's too bad at all. This company can still easily get financing if the recession hits it much harder than it's supposed to. But overall, I think that's perfectly fine. And then if we want to go here, if we want to go to the income statement, this is the one thing I wanted to focus on. This is the one thing that I have that's a real negative for this company, is that the revenues have not really taken off yet. Now, most of these products that I went over, involving the Horsefly, involving their C1000, involving their delivery app, a lot of them are still in development. They're still processing a lot of these vehicles, a lot of their products, and they will be coming out in the next couple of years. Now, even though they're starting to come out with them now, the revenues have not been really reflected. So this first year or two in 2020 and 2021 is when they're really going to start getting their first pieces of revenue. Those of you that don't know, they did sell a model of Horsefly to the United States government, to the United States military, so they are getting a contract there, which could potentially be huge if they increase their purchasing power for the Horsefly for the United States military, so that could be a possibility there. So I want to look at their numbers for their revenue growth. They had $10 million in revenue, and then it has been heavily decreased over the last 2 or 3 years. Their gross profit has been not good at all. Their operating income has been negative over the last 3 years. And if we look at their net income, this is the only benefit I would say to this. They have increased their margins a little bit. Their net income has shrank, but they've also had a lot less revenue. So it's kind of a good and bad story here, from the fact that their balance sheet is not that bad, not that out of control, but they are extremely unprofitable. And so far, the revenues have been very minuscule. It will get a lot higher this coming year or two, but right now it is kind of ugly. I got to be honest. It's not good at all. But when we look at these and we look at some of the opportunities that we have for the long term here, immediately when I see these drones and all the patents that they have for these delivery systems, I immediately think a few companies that come to mind immediately, like UPS, FedEx, Tesla, Amazon. All these companies could be interested in this technology, and they might have to go through Workhorse's patents to get there. So if that were to happen, that would create a huge revenue opportunity, whether they were to get some kind of royalty deal, or they could just possibly get bought out. If we go ahead and search their ticker here, WKHS, their market cap is about $400 million. A company like Amazon or Tesla or a large company like that could buy out this company entirely so easily. When you have a company like Amazon that has $100 billion plus, they could literally buy this company outright and take less than 1% of their balance sheet to do it. So this company could get bought out. So overall, now that we went over the balance sheet, we've went over the investor relations page, is this a stock that you should be invested in? Is this a stock that you should consider buying now that it's about $7 a share? And the short answer is no. Right now at $7 a share, I think it is starting to get extremely overpriced. I do think that the revenue has a long way to go. But that said, if you're looking for more of a speculative play, if you're wanting to buy something now and hope that it gets bought out in the future, which I think has a great opportunity over the next couple of years, and also if you're just looking to buy something that's not profitable yet, but in the next couple of years, if they don't get bought out, could develop these products and become very profitable and very huge over the next couple of years, absolutely. So if you want to add this as a speculative play, absolutely go ahead and add it. It's not one that I'm going to be purchasing, because those of you that know, that watch my videos, I focus on older dividend companies. I only invest in dividend companies, and I don't own any companies that do not pay a dividend. And this company does obviously not pay a dividend because they are not profitable yet. But I think that said, if you're going to invest in a speculative company, I would much rather invest in a Workhorse group, a WKHS, that has a lot more potential to double, triple, quadruple your money, because it does have such a small market cap, rather than something like a Nikola Motors. And I know one that a lot of people have seen recently, one thing that people have been getting into like crazy, is HTZ Hertz Group. Why would you invest in a company like Hertz Group? If you're wanting to invest in something that could potentially double your money in the next couple of months or weeks or maybe in the next year, I would go with WKHS. It's not one that I'm going to be messing in, but those of you that are going to be investing in it, I wouldn't doubt you, as long as it's not a huge part of your position. But overall, guys, that's pretty much my opinion on Workhorse Group. I will give you a quick update on my portfolio. I do have Broadcom doing very good. It has been up over 30% now, and a lot of my largest holdings, my top three, are now up over 25% or more. The biggest gainers in the portfolio, we still have Discover Financial Services. Apple is steadily climbing up. We're up almost 50% now on Apple. And then we are down on two of my three stocks that were down last time I filmed the video. WP Carey is still in the red, and Starbucks are still in the red, and we now are up in the green on Store Capital. But overall, I love both of those real estate companies. I think they're going to do just fine in the long run. But overall, the portfolio is doing very good. I'll go ahead and scroll through every position right here. If you want to see any of my performance on these stocks, you can go ahead and just pause the video. I do like how Qualcomm has performed. I think over the next year or two, they're going to do very good. But overall, in the portfolio, we are getting closer to 2,700. I believe today is the highest we're at ever. Yeah, 2,660. We are up 20.66% in total. That's a money-weighted return. We are up $379.54, $359.98 coming from market gain, and $19.56 coming from earned dividends. Overall, through a time-weighted return, we are up 14.7%. That's what I like to focus on. 14.7% based off a time return rather than a money-weighted return. Activity based off of dividends. In dividends, we are up quite nicely, and we did just receive another dividend yesterday from Dominion Energy. But overall, the dividends are really starting to stack up. You can see them coming in like crazy here. They are very small. Most of them are $1 or less, but they are getting to get bigger, and they are starting to grow my portfolio. So overall, guys, thank you guys so much that have watched all the way to the end. Like I mentioned in all of my videos, go ahead and use this referral link if you're interested in getting started with M1 Finance. There are lots of links in my description for M1 Finance, for credit card referrals, for scheduling a phone call with me. You can get interested in any of that in the description of my video. So thank you guys so much for watching. If you made it all the way to the end, make sure to leave a comment down below what you think about Workhorse. Do you think it's more of a speculative play, or do you think it's a great opportunity to invest in? Are you going to be buying it at $7, or are you going to be waiting until it drops more in share price, or are you not going to mess with it at all? Let me know down in the comment section. I would love to hear any opinions. And thanks you guys so much for watching all the way to the end. I'll see you next time.